Happy Friday, traders. Well, it's been an absolutely tricky week at trading these markets. And the simple reason is that the market is super confused about exactly where we are at with the potential US and Iran agreement. At the beginning of the week, market was trading risk on because we had lots of positive headlines on the weekend that the deal was pretty much a done deal and that would be signed within 24 to 48 hours. That did not happen during the week. We actually started to see some bombs flying between US and Iran. It wasn't a major escalation, but market obviously started to get nervous that obviously maybe the deal's falling apart. Market starts trading risk off. Then again, last night, after markets started trading risk off, we got more positive headlines coming back. The deal's a done deal again. It just needs Trump's approval now before we go to a potential signing ceremony in Pakistan. So that's what the markets are trading at the moment. They are trading risk on. They are believing believing the headlines that potentially we're doing a deal again, and it's imminent. So where are we at? The most important market is crude. So crude at the moment is trading sub $90, so it is trading lower. It is believing the headlines. It is trading a good almost $10 from last Friday's close. So crude certainly is giving the market some stress relief that it is going in the right direction. But I'd suggest chasing crude fresh lows or fresh shorts at these sort of levels definitely is quite risky. At some stage, can crude go lower? Yes, it can. Potentially we can go down towards $85 or thereabouts, but I think we're going to find some good support at some stage in the short term. Just for the simple fact is even if the Strait of Hormuz does reopen soon, we still have a massive supply imbalance, and that is not going away anytime soon. And potentially it may not get rebalanced until sometime in the first quarter of 2027. So higher crude prices are with us for some time. It's just where that floor is the question. So look, I think there's a huge trade getting short at current levels or chasing this lower. And potentially, if you think that these deals are going to fall through, these levels to buy crude are absolutely going to be fantastic. Anyway, US bond yields, another very important market. We've seen those US bond yields obviously rally and have had a significant rally in the last couple of months while this war's been going on. But it has followed crude, just like it followed crude on the way up. It is following crude lower at the moment, those bond yields. So we're getting some stress relief for markets there as well. So US 2 yields at the moment are trading just above 4%. Last week's close was around about 4.12. So a good 10 basis points lower at the moment. No doubt if we can break that psychological 4%, that optically is going to look a lot better as well. 10-year yields have done a bit more work. They went up to a whopping 4.7% last week. We broke 4.5% last night. We're down around about 4.45%. Look, needs to break 4.4, and then technically it's going to start to look quite good again. It's looking like a bit of a false break to the top side, and we will see a lot of stress relief for markets. But at the moment, both US 2 years, 10 years, where they are at the moment, yes, we're getting stress relief, but technically at the moment, they need another marginal break lower to really give these markets even more relief. So we're not out of the fire yet with yields. As far as equity markets are concerned, yes, S&P and NASDAQ did start retracing some of this record run on the back of the market's nervousness about whether or not a real deal was going to be made. But now those positive headlines have come back and the buyers have come back big time, pushing them back up to record highs. We've said it so many times. This has been an absolute phenomenal rally. It is a phenomenal bull market. Traders are aggressively buying US tech narrative, AI narrative, any dips, and they are disregarding a lot of the negative news. On the currency front, there really has been it's been sidelined, to be honest. Haven't seen any big trades for the US dollar. We haven't really seen the US dollar sell off, even with these positive headlines and the fact that risk is bid. So I don't know whether or not the currency boys are waiting for actual confirmation, that the deal is done and it's actually signed. And then maybe we'll see some decent US dollar selling. But at the moment, certainly, we are not seeing that. Haven't seen any really big trades in the currency market, directionally anyway. Precious metals, look, gold got absolutely smoked in the last 24 hours, sub 4,400, on the nervousness in the markets. But again, obviously, it's now Retrace. It's trading like a risk asset during this US and Iran conflict. So now we've retraced back up towards 4,500. Look, that's been a pretty decent support level, around about 4,480, 4,500. So look, if we do get a close tonight above there, potentially that run lower was a false break, and then gold potentially can grind higher again. So look, we are at an important support level for gold. Jury's still out directionally exactly where that's going to go, and obviously, once we get a move in the currency market, that's probably going to help with the direction for gold and trading gold a lot more. It is finally, Bitcoin's worth talking about. Simple reason is that the highest for May was up above 80,000, pushing 82,000. When we had this nervousness in the markets in the last couple of days, market trading risk off, Bitcoin being a risk asset, it sold as well. It sold down to around 72,500, so almost $10,000 from its highs this month. It has retraced a little bit higher at the moment, pushing 73.5 towards 74,000, but a long way from those highs, and still obviously it's been underperforming the rest of risk rallying, especially US equities. So look, if you believe that this deal is getting done and it potentially will be signed in the short term, maybe these are good levels. So there might be a decent trade there. But obviously at the moment it's been the weak link in markets, and it has been struggling. In any case, key takeaways is that market is 100% still focused on exactly what's going on with this US and Iran agreement, the memorandum of understanding is what they're calling it. If this does get signed in the short term, then obviously this risk rally is going to continue. If it does fall apart, obviously it's not going to be fun in markets. We do have a weekend coming up. It is gap risk. There hasn't been one weekend for a good month or two where we have not seen gap risk either risk on or risk off hit markets on Monday. So you need to be careful trading with open positions, especially if you've got any size on them over the weekend, because it's the headlines could come out either bullish or bearish. It's that sort of market at the moment, so anything is possible. Can't rule anything out. Anyway, good luck with your trades. Have a great weekend, and we'll check back in with you shortly.